Well, ID generation, we use multiple sources. So we have database screening tools that we use, and we have our own screens and lists of criteria that we look for in finding these. So we love unbiased screening, where you can filter thousands of public companies through these screens. We tend to look at things in the growth area. We look at things like high returns on invested capital, or in particular rising returns on invested capital. Top line growth, we look at margin improvement. These are the characteristics of a growth company. There's a virtuous circle going on where the top line's growing and they're getting scale in their business. So we screen thousands of companies down to a few hundred, and then we filter those even further, doing more qualitative exercises like looking at the actual business. What do they do? Is this an attractive business, an attractive niche? Do they have something proprietary? Is this a long-term growth market? Are they gaining share within it? So it's initially quantitative and then a lot of deep qualitative work. And then we get down to a list of maybe 10 or 20 that we're focused on at any time. And then the question is always, is the price right? Can we buy it at the right price? And growth companies, I don't think, lend themselves to traditional valuation metrics, or shortcut metrics as we call them, PE ratios, price-to-book ratios. You need to actually go in and model out the future and express an opinion as to what the future looks like. How big is the market they're in? How fast is it growing? What's their market share? How large will it be 5 years from now, 10 years from now? It requires some assumptions about the future of the world to value these businesses. And then looking at the economics. We love a business that's, say, a small cap company, a 500 million to $1 billion market cap company that's growing rapidly, maybe 30 or 40% a year. It's not yet showing a lot of earnings leverage. So they might have, say, 5% EBITDA or operating margins, but you can see that that's scaling. Perhaps it was a money-losing business a few years ago, and it's going to be a 25, 30, 35% EBITDA margin type of business 5 or 10 years from now. And I can give you a few examples of those kinds of companies.